So now that we've completed the accounting cycle, we will move on to different items that will help us take care of our business. So the first item we're going to look at is preparing a bank reconciliation. And a bank reconciliation is a great internal control for your company because it is a safeguard over your biggest asset, which is cash. We are going to be looking at case in point 6-3, prepare a bank reconciliation. So we are going to get certain information, gather certain information together. And based on that information, we're going to prepare a bank reconciliation. We're going to have a bank statement from the bank, and we are going to have our ledger listing for our cash account that will help us figure out what the problems are or the differences are between our bank statement and our ledger. So the first thing we're going to be able to tell, looking at case in point 6-3, is that our bank statement shows an ending balance of $14,250. And that's what we're going to end with in our bank account. But there might be things that aren't necessarily recorded in that bank account. So we're going to talk about that. The general ledger displays an ending cash balance of $13,700. So we're going to put that on the book side. Our ending bank balance is on the bank side of our reconciliation. Our ending book balance is on the book side of our reconciliation. A check written by HHO Corp. for $250 was rejected by the bank for insufficient funds. So what you want to think about when you're trying to figure out where to put this on your bank reconciliation is where you would have found out about that information. So if there was a non-sufficient check, I probably would have found out about it from my bank statement or from the bank and would not have recorded anything yet in my books. So I'm going to have to make the adjustment for that on my books on the side of my reconciliation where I would not know about the item. So we had an NSF check of $250. Non-sufficient funds. There wasn't enough funds in my customer's account for that check to go through. Then we have some outstanding checks. So outstanding checks are checks that were written against my bank account in my ledger, but hadn't cleared the bank yet. So obviously the bank side of my reconciliation did not know about these checks. So we'll want to enter these checks separately so that we can make sure they do clear our bank into the bank side of our reconciliation. We had bank charges for the month of $75. So I would have received my bank statement. It would have had $75 on it, bank charges, and I would not have recorded that on my ledger, but I found out about it from the bank. So I want to record it on my book. You could also think about that as your ledger side, and that is a bank charge of $75. On behalf of the company, the bank collected a note receivable of $600 from Speed Inc. So again, I would have received my bank statement and found out about this collection. So I knew about it from my bank statement. I'm going to record it on the book side of my reconciliation. Deposits in transit totaled $355. And what are deposits in transit? From your reading, deposits in transit are items that were deposited to the bank but have not been recorded on your bank statement yet. So maybe I made them past the bank cutoff. So I already know about them in my ledger. I'm going to record them in the bank side of my reconciliation. The bank erroneously reduced the company's bank account balance by $370 for check 9, which was written by the company for $730. Now the problem with this is a bank error. So if we go back and look, we wrote the check for $730. The bank cleared it for only $370. So really, we need to deduct another $360 from our bank account. They didn't deduct enough out for that check. So you do have to think a little bit about those errors. So this is a basic bank reconciliation. We need to go back and make sure that was in the wrong spot. That would actually be a deduction. So you would go back and check and make sure that everything is in the right spot. And once your ending or adjusted bank balance ties with your adjusted book balance, you can be fairly certain that you've picked up all the issues and have them recorded in the proper place on your bank reconciliation. Now, once you've completed your bank reconciliation, you will go back and make the adjustments to bring your book balance up to the adjusted book balance. So our book balance is $13,700 on our ledger. We want to make the changes that will create our adjusted book balance, or our adjusted book balance will be $13,975.